This session will help us also look at both the sides of whether it is the game changer, or maybe there are some issues that we need to also resolve before the potential of digital can be achieved. So for this lively debate moderated by Mr. Stephen Rasmussen, I invite the panel to come on the stage. Steve Rasmussen, lead technology program CGAP. Dr. Pawan Bakshi, India lead financial services for the poor for the Bill and Melinda Gates Foundation. Ms. Monica Hallan, consulting editor of Mint. Mr. Sangram Singh, president at Indefi Technologies Private Limited. Ms. Victoria White, managing director, Axion Global Advisory Solutions. And Mr. Anand Bajaj, managing director and CEO, Nearby Technologies Private Limited. So, Steve, you're aware that there is a delay that we are running, but we leave it to you, to your deft moderation, to bring the best out of the panel, but with a limitation of 15 minutes, so 10 minutes less than what we probably had for you.
Wow. That'll get us excited. Well, welcome, everyone. We are here to discuss an interesting topic. I think the previous panel also, that I would listen to, the small group or the breakout session, discuss some of these same issues. But we're trying to get into this question of does digital really reach the last mile? Does it reach poor people? And we have a very distinguished panel. So they said they're so famous that I don't have to introduce them. But I'll very briefly say that to my far right is Victoria White, who is the managing director for Axion Global Advisory Services. Next to me on the right, Monica Hallan, who's the consulting editor at Mint. To my immediate left, Pawan Bakshi, who's the India lead for the financial services for the poor for the Bill and Melinda Gates Foundation. Next to him, Sangram Singh, who's the president of Indefi Technologies. And at the far left, Anand Bajaj, who's the CEO and founder of Nearby Technologies. So the way we're going to do this is, I want to say right at the beginning that we have two questions that we put on the app. So if all of you have downloaded the app, you can get on there, you can answer the questions. We want to get a sense of what the audience thinks about this topic. And then we'll put up some of your responses later on. And after we go through one round with the panelists, we'll try and get some audience response or questions. So you'll get a chance to interact. So I think you've read the intro to what we're saying, but without going into all of it, is to say that there's been a lot of hype around the world about how digital can really change the lives of poor people, or digital can change financial services for poor people. And we've got a huge amount of energy and excitement and investment going into everything fintech, as it were. And a lot of creative energy, and some of those companies are on this panel, in fact. And in India, India's been a leading edge for a lot of this. I, like some other people on this panel, go around the world and work on these things, and everybody wants to know about India. There's a sense that India has done something that few other countries have perhaps accomplished. And there's a lot to be said for that in terms of the just mobility, the connections in the payment space with NPCI, regulators who are enabling to a large extent. Some of you may not agree. And the fact that India's now got the vast majority of adults have accounts, at least, as a basic stepping stone, 80% or more. So that's the things we're going to explore on this panel. And I'm going to start off with some questions. Maybe what we'll do is we'll mix this up a little bit. They all know what the question is, so they prepared something to answer. But let me start on the far left, Anand, with you. You're in with Pay Nearby, you leverage technology and a big network of retailers to deliver financial services to the last mile. And I'd like to know how this sort of phygital model, physical and digital, because you combine the two, enables you to expand to segments that otherwise were unreached or are underserved. And just how does that work? And does it work?
Yeah, it does work for sure, because 93% of our Aadhaar-enabled payment service transactions are in rural India. When whole of Bihar was under flood, July, August, September, when ATMs were down underwater, what was up above the water was thumb, the Pratyaksha Pramanam moment, and we were doing about 1,000 crore every month of Aadhaar-enabled payment service where people could come and put their thumb and withdraw money, showing literally thumbs to the flood. So reaching out financial services could not have been better, but to take it through a phygital mode or a digital mode that you call it, with 7 lakh retailers spread out in 17,000 odd pin codes, serving 8 crore customer would not have been possible otherwise. As far as the resolve goes, it is about bringing the high end of technology to the bottom of the pyramid in a sachetized, granularized, universalized manner. So if you have 200,000 ATMs and 150,000 branches, 50 lakh, 5 million business correspondents across the country could actually marginalize the bank branches. The whole need would be obviated. It's a scary thing though to say. But the Indian demographic, if you see, 8% of India is digitized, then there is marginalized, and then there is subsidized India, which comprises 92%, where the government is doing its own effort, where everyone is ignoring certain section, and then there is the loyalty shifting scenario where who's giving discount and the customer would move. Sangram would agree to some bit of it.
Okay, so the sense that you are reaching much further by using digital. Okay.
Absolutely.
Pawan, just to take a bigger picture look at some of that. The Gates Foundation has been a leading proponent of digital financial services and what it can do for opportunity for including poor people. And has it really paid off for poor people? I mean, how much progress have we made, and what do we know about how people are transacting, say, for example, on NPCI's UPI, but other things in India? Do we really know that it's reaching out to everyone?
Yeah, sure. I think if you ask me, is DFS, is it a destination? I don't think it's a destination. I think it's a journey, and we are on the journey. And the pathways to that have been, I think, not one but a lot of them over time. So let's first start with AEPS, right? AEPS, NPCI is reporting about 220 million transactions a month on AEPS, which is saying that can a person go to an agent and do either a cash withdrawal or a cash deposit, at the least. Even if you assume that half of those transactions are non-financial ones, it's still a substantial sort of number. And the other is that NPCI itself only reports off-us transactions. The on-us transactions don't get reported. Our sense is that could be at least 2 times or 3 times the number which is being reported, which is phenomenal, right? Just imagine that if you had to serve those number of customers in bank branches, they would burst at their seams. And the costs that the banks would need to entail to be able to solve for that. The other is, let's take the stuff on DBT. The government of India is today transferring about to accounts of about 590 million of people. How would they go ahead and do this? And they're all able to today withdraw cash. It could be at some expenses, but then they are able to go out and withdraw cash every time that they walk up to an agent to withdraw cash. That's a huge number. That's more than half the population of the country, right? That wouldn't have been possible otherwise there. If you talk of UPI as an example, take a UPI today, we know that large number of transactions of UPI are on smartphones, but we cannot say for sure that smartphones are only owned by rich people. There are lots of people who earn about $2 a day who would rather have a smartphone for use of entertainment than they might not have ability to spend on transportation as an example, but they will still have a smartphone. So we don't know because of lack of data that how many of these people actually use UPI, because UPI has been reported largely on smartphone usage, and we don't know how many smartphones are owned by the poorer people. But if you ask, say, a Google, they will say that about 60 to 70% of the new customers that they are getting are from towns which are under tier 2. So it's tier 2, 3, 4, and stuff like that. So that's what's happening. So you see more and more people coming into fray. The best thing about this is an example that you might be aware of is P2P transactions, right? Till about 5-7 years ago or 10 years ago, the only way you could send a remittance was through India Post, right? It was a money order. And a money order cost 5%, right? And you weren't even sure of the delivery of the time. It could take about 3 days to 5 to 10 to 2 weeks, right? And you were at least sure it'll reach, but you didn't know when. And today UPI has gone and made cost of transactions zero in real time, right? Unfortunately, what we've seen is that the poor people have paid a premium historically for everything and every transaction that they've gone and done. Digital has gone and done a democratization of those transactions whereby they are now able to, at least in theory, be able to do the same things like I and you do without paying that premium. And I think that is the biggest gain of all time, I guess.
So a lot of examples or evidence that things are, you think, moving in the right direction, and the sense that we need more data. We really need to know more about what's happening, at least at the bottom half. All right, Monica, I'm going to save you for last so that you get a chance to really have a go at these guys. But Victoria, to ask you a question, to what extent, almost a similar question, but to what extent have digital financial services improved financial inclusion for poor people? And what have you seen either in India or other countries, because you work across a number of countries, and Axion's deeply involved and has been in the financial inclusion world for a long time. And just interested to see how you see the whole digital thing. Has it increased outreach? Has it reduced costs? Has it made it easier for poor people or not?
Great. I think maybe just stepping back a bit about Axion, because I think it does also shed light on my perspective as well. As you said, we have been working globally. We're a global nonprofit founded in 1961 and really have exclusively focused on the financial inclusion space for these many decades. Been in India for the last over 10 years, and really our, I'd say, theory of change is really working through the broad range of financial service providers that are out there to really help bring the financial tools for people to improve their lives. So very much end goal being improving lives. And I would say over the last certainly 5 to 10 years have really recognized the transformative impact that technology, if appropriately harnessed, data analytics, all the new tools and I think infrastructure that we're seeing can certainly have an impact on all of that. I will say, though, that I think certainly key lesson that we're seeing is, the poor, quote unquote, the low income, are not a homogenous group. And I think that was also picked up, I think, in one of the previous panel discussions as well. But really a very heterogeneous group. And I think not just obviously at the global level where we still have 3 billion people who are either underserved or unserved completely, but in India obviously as well, where at that kind of lower income level, you do have such a wide range of different personas. and the needs for those different segments, certainly then correspondingly the barriers for those different segments as well to access digital financial services are quite different. We recently actually conducted some behavioral research along with Microsave in India, specifically to look at that question of what are the barriers for adapting digital financial services for the low-income market segments. And I think their clear message was to really, we need better, to your point, also better data to really better segment and understand the markets that we are serving. And one profile of customers will have very different barriers than another. So to just say that kind of as a blanket group, that there are barriers, I think we need to do much better about really understanding the specific needs of different customer segments. And so I think there have been some very exciting, I think the successes that we are seeing are by companies that I think really do understand the differentiation that is out there and really start with putting that customer first, understanding what the needs are of the customer and what the pain points of that customer are, and then using the right combination of tech and touch to then better serve that customer. So I think, examples abound, certainly some of our portfolio companies here in India, also globally, of cases, whether it be Toffee, for example, Toffee Insurance here in India, one of our portfolio companies, which really I think has rethought the whole insurance model and to think about how to really, again, think about what the customer needs, bite-sized insurance delivered at the time of need for certain life needs, whether that be dengue fever during the season, whether it be bicycle repair needs, but really thinking differently about the product and then that combination of tech and touch to reach the customer. So I think we are seeing certainly increase to outreach. We are certainly seeing, I'd say also, people being able to access and learn to access products if brought with the right approach to that tech and touch. But I think even more so, the value proposition. And for those companies that are able to make the right case, putting the customer first, we are seeing success with those models.
Thank you. So what I heard in some ways was, yes, we're seeing signs that digital can help, and we think it's got real potential, but the issue is not the technology. We have to start with the users. And if we do that right, technology can be an enabler. Okay, Sangram, you run a digital financial services company, and interested to know how that's helped you in terms of how has it helped you reduce cost, how has it helped you reach people that weren't reached otherwise. Some skeptics might say, and some have said, that all we're doing is reaching the same 200 million people, and we're just making businesses more profitable because you reduced your cost, but you're not reaching anyone new and you're not lowering your cost to them. Is that a fair criticism in your business, and how does your business work?
Okay. So let's sort of break it up into a couple of parts that where do we see digital really helping, and then what kind of progress have we seen? If you look at financial services, they've been around for a very long time, but there has always been friction in financial services and very well-known parts of friction. So reach and access has been one issue. Information availability has been one issue. What we do is we've taken the sort of the underserved part of the SME segment, and we go and lend to those consumers or those partners, and we use us as a digital lending platform, and we work with some lending partners and do it ourselves as well. Now, traditionally, this was all being done through brick and mortar branches where you needed reach, you needed a lot of capital to put up hundreds of branches. But today, when we partner with other digital service providers or other digital platforms, for instance, food technology platforms, for instance, payment aggregators, remittance partners, we are able to sort of break that friction out of the process where reach and access was so difficult and create a much larger discoverability. That helps us get to consumers who were earlier finding it difficult to reach out to lenders. The second point which has really helped is digital information. So whether that's information about how much a small delivery outlet is selling on a food aggregator platform, or how much a small retailer is doing through digital payments, or how a small, let's say somebody working out of the home but selling on an online platform, how much transactions they're doing. That digital information is now translating into some intelligence which helps you figure out how you can lend to those partners. That's helping grow the entire pie. So the combination of these two gives you one more advantage, which is that the moment your costs begin to come down, you're now able to do things in smaller packets. And I think India saw this consumer revolution happening maybe 20 years earlier, when large Uber-sized shampoo bottles were converted into sachets. I think we are seeing a lot of that in digital financial services now. For instance, if you look at payments, large ticket payments were mostly digitized. People were not moving hundreds of thousands of rupees in cash. Okay, some of them maybe were moving it in cash, but there was a large part which was already digitized. Things like debit cards and UPI and IMPS, what they've done is that they've brought digitization to smaller ticket. Now, I think the next level is when we're able to do smaller ticket loans to both consumers and self-employed businesses. We're able to do smaller ticket investments, all because it's possible to do it digitally and not do it the traditional way, which was designed for larger tickets. It was for more expensive. And hence, by design, excluded a large part of the population. So I think that's the advantage we are seeing. The other question is that, is it really translating onto the ground, and are we actually seeing growth? I've been a sort of payments practitioner for nearly 2 decades now. And you know, I always get surprised by the fact that our growth gets so undervalued. 10 years back, the only digital payments system that was really working in India used to be credit cards. 10 years back, the total digital payments as a percentage of consumption expenditure in this country used to be under 3%. Today, that's, if you just take the cards itself, which is debit plus credit, that's probably touching somewhere about 13 to 15%. If you add everything else, that's a huge growth. But I think it just makes a simpler narrative to say that, you know, we need to grow more and we need to do a lot. Of course, we need to do a lot, but we have grown tremendously over the last 10 years. And I think as long as that continues, we will find a lot more people coming into the finding access, digital access to financial services, which they were not finding earlier.
So the evidence is that we really are growing the last 10 years, and that we're able to now do things in financial services we weren't able to do before. There was a session earlier today that showed some of those numbers as well. The growth numbers are pretty significant in this space. Monica, coming to you, you know, as a journalist who looks at a lot of these things and talks to a lot of people, but is there any reason to think we should rethink the focus on digital in India? You know, a lot of people live in less well-connected rural areas, low levels of comfort with technology, maybe, at least for some people. Most transactions still happening in cash. Are we sort of expecting too much? Are we asking too much? Are we going too fast? Are we going in the wrong direction?
So Stephen, I'll try and cut this conversation in 2 or 3 different parts. The first is that banking has been called the 3-6-3 profession. You borrow at 3, lend at 6, golf at 3 o'clock. And that sort of defines what banking has been, even in India, where it took a Jan Dhan personal push by the Prime Minister to get just basic bank accounts down to the village level. I mean, you did not have inclusion in the very basic manner of owning a bank account till a political push happened. So, so to that context, I'm saying that there is absolutely digital is the way forward, because the traditional ways of banking, by the time they are reaching the last mile of India, are already outdated. They didn't reach, and there's an opportunity to leapfrog and go fully digital. The second piece is that we should not assume that the excluded are not intelligent people. They are very intelligent. They are maximizing a very complicated life with very complicated money situations in the best way that they can. I think if we can focus on trust how to get them to trust digital, that is where we will make the greatest, the greatest progress will happen if we are able to provide an environment of trust so that they can onboard fully. So that's the second piece. The third is that we are looking at inclusion right now only as payments and credit. I'm going to push the conversation a little bit down and say, this is the first, we're just starting out. But we're building pipelines into the wallets of the excluded, the poor, the not so poor, the people who cannot afford to lose the money. Once the pipelines are built, my worry is what products will go through those pipelines to these people, to all and it's really to everybody. So these people are no different than us people, because finally the products which reach us and them are the same. And us, which is the included urban well-off India, is right now also being sold poorly constructed, badly products full of tricks and traps. Latest case in point has been the Carvey brokerage using the power of attorney fraudulently to dip their fingers into shares they did not own of clients and pledge them for loans. This is happening in a regulated part of the market with money of people who mostly live in tier 1 cities, who are supposedly rich. My worry is that we have a regulatory architecture which is not conducive to building this trust. And I have spent a lot of time, I have been a part of a lot of government committees, regulatory committees, to talk about this issue of this regulatory failure in India to establish trust in the minds of investors, where you have, for instance, we have regulatory arbitrage, where a product like pensions has 4 regulators. There is the PFRDA, there is the IRDA, there is SEBI, and there is the Labor Ministry. You have four regulators for 4 different kinds of products. So as an individual, I'm shopping regulators who obviously I will have no idea about, and firms are shopping regulators who are the most lax. Then you will have arbitrage on products, for instance. Who will regulate products like home loan deposits, gold deposits? I think a lot of people will understand these products, they have traditionally fallen into a regulatory crevice, and a lot of people have lost money. Unless we have regulatory collaboration and they stop fighting on their turfs, and we have policy intervention which causes a deeper focus on the consumer, and we move from a buyer beware world to a seller beware world of suitability, then I'm confident that we should expand the payment and the credit to other financial services. So inclusion is not just payments, it is far, far deeper. And that is really where the huge market, wallet share, lifetime earnings for firms also lie. But I worry that we are building pipelines which will get tricks and traps and frauds into really wallets that cannot afford it. So it's really about trust. Is that provocative enough?
So the tricks and traps might get ahead of the advantages. Interesting comment to say that trust is a really important fundamental issue, and that cannot be put just on us as individuals. We won't probably ever understand enough to get ahead of the providers, but unless the providers are regulated and the onus is put on them to be responsible, we might not develop that trust. Okay, you've heard everyone across the panel once. Can we put up the answers to the questions on the screen? Is that, I'm not sure we were getting, we're getting more answers. Wow. There was a question before this one. Is there a first question? just want to see, I just want to get a sense of where okay. So the sense is 2-to-1 that the gap is widening, the digital divide is growing, the gap is widening between excluded and included populations. And on the second question, I think it was also about a 2-to-1, but going in the opposite direction. Poor people are benefiting. All right, so the audience is split. Maybe different parts of the audience answer different questions. Let me open it up. If there are a couple of people who want to comment on this, and we'll come back to the panel, or you might want to ask another question, because between these two questions, we're getting a little different sense. This one suggests that you agree with the panel, that we're benefiting from digital financial services with all the cautions that were set across the panel. The other question suggests that we're growing the digital divide and we're excluding more poor people. Any comments or questions from the audience? If not, you're going to listen to me go back to the panel.
Trying to see it from an arbitrage perspective. And given, I think, as I'm hearing, you are supportive on the digital side, that yes, digital is important to reach. How do you really bridge this? How do you have some ideas, some suggestions through which that we can reduce this arbitrage and make it more customer friendly?
You know, it cannot be the firms who will do it. Unfortunately, we cannot push this one back onto the corporate sector or the firms. It really is a market design problem, and markets are designed by policy and regulators. So I'm squarely blaming policy and regulators here to say that in your narrow fight for turf, you're harming the market. Because look, it is a market economy. The corporate will chase profit, and that is fine. How is it? So what is the role of a regulator? What is the role of policy? Market design, so that most of the firms will do the right thing. You will always have, so why do you have road signals? So that 90% of the times you don't have an accident, one joker will always jump the red light, you can catch him. But if if the traffic signaling is all confusing, then there are accidents, which is what we are seeing right now. So I'm putting the blame squarely on policy and regulation and saying, you need to get market design right, then we will see better behavior on the ground, which will then help to build trust. So yes, my solution is more idealistic, but that is what goes into making a sustained good market out there. And then we don't have to keep blaming a Karvi or a XYZ. You know, we don't have to keep blaming a company. The company is a symptom of what the problem is. The problem is market design.
Anand, do you want to take a go at that one?
See, America sent satellites, banned India. America made nuclear power, was looking at third world nations not to do it. And here are we self-righteous, uprighteous, banning on certain policies which will help us reach out for financial inclusion services. The total expense ratios, for example, in mutual fund industry in Americas excludes the distribution margin. And here in India, we took upon ourselves too early to say, no, this is what it will be, and it will be distributed over 12 months. This divide is going to only increase with this. The rich and the poor, the reach and the non-reach will only continue prospering. The gap will continue prospering. There are few more impediments, if someone may make note and do some policy impact of it. There are 600 million RuPay cards issued. National Payment Corporation of India started doing too much of good work too early. Those cards are date expired now. And no bank is willing to go and reissue those cards to the customer because they haven't used it, right? It's a cost, $100 costing. How do you bring them up onto UPI? Even 400 million people have smartphone, 100 million use UPI, 300 million missing gap, staring at it with a debit card in their Almirah with Aadhaar card, thinking it is another one of those cards, right? The 3.15% that government gives out for distribution of direct benefit transfer, why is 0.15% being given out to the business correspondent? And here in the morning session, we were talking about viability of business correspondent. How on earth is that going to happen? Look, there are nuances that we have implemented in UPI. If a transaction fails, the money is credited immediately. When on earth will certain banks start giving back AEPS money back to consumer before 6 freaking months? Transaction is debited, the transmission has not happened, customer's account is debited, the BC has not got the money, neither has customer for 6 good months. When will you start giving that money instantly back to customer? How wouldn't the divide continue growing? Tell me one reason. There are 10 more.
Pawan, you want to comment on that issue of this sort of gap between policy and regulation and what's actually happening on the ground?
Yeah, I think it's work in progress, right? So is there a need for systems to change? Of course there is, right? Are we doing anything about it as a country? I think we've started, as I said, the journey. Have we arrived there? The answer is no. So as an example, do we have a grievance redressal management system today in the country which works? So is there a number which I can call and get grievance redressal for? The answer is no. Is there a number which is printed on posters in rural areas to say if there's a problem, you call this? The answer is yes. Does that phone number work? Maybe half the time, maybe half the times no. It's not that we've not thought of the problems. I think the problem lies with the implementation of these things. Not all organizations are geared up to handle this activity. So as an example, I often talk about that we are trying to go digital in financial services with the core banking systems of the country in all banks, which are non-flexible at all. So how can you expect changes to happen in the banking infrastructure where they're saying how do we serve the customer in a far better and a quicker and a sharper way, where you're not integrated back on the CBS? Because the moment you're on CBS, you become as inflexible as the CBS itself. I think it's more than just only policy and rec. I think it's also the core infrastructure which we exist in, which will need to get relooked. And as an example, I agree with Anika. If we are going digital and our regulator doesn't have the capability to review 1.2 billion transactions a month, why? Because it's all digital, and they don't have the capacity or capability today, they need to build that capability. But what will it take them to get there? I think that's a regulator's call. I don't think either of us are positioned to say what the regulator should be doing in that area. But I think there's a huge, big opportunity there, right? In a similar way, I agree with you. If a poor person is trying to withdraw cash at an ATM, enters the card and there is a failure, and there can be a failure, and the cash isn't withdrawn, I mean, it's not disbursed, but your account is debited. How long should it take for that that kind of reversal of transaction to happen, right? It's not that these transactions do not happen in real world in face to face. I go to a teller in a bank, and this a gentleman says, "Oh, there is no electricity and my computer will not work. I'm stuck." Right? Nothing to do with technology, right? So there will be exclusions of this sort. There will be issues and challenges, and I guess we are okay with it because we've learned to live with it, right? But if it's not so, the one of the aspects of digital is instant gratification, right? And if we are talking of an instant sort of gratification for doing the transaction, then we want to do instant gratification for everything around it as well. It cannot be that we just do this part, one part of transacting it instant gratification, and everything else can wait for a week, 2 weeks, or 6 months, right? So it has to be a, I think, comprehensive ecosystem of things that work in almost instantaneously.
All right, let's come back to a couple of our panelists here, but maybe other points from the audience. Sort of disagreement with the panel, questions. There's one back here. I think you have a microphone standing up over there.
This is a question to Mr. Bajaj. Sir, you told that why not the bank has to give proactive credit to the customer. See, we are from Ujjivan Small Finance Bank. From beginning, we are giving the proactive credit to the customer. Then after some time, after 4 or 5 days, some other bank is asking for late credit. late reversal they are asking. So if that is the case, already we have given to the customer credit, and also bank also asking for the refund. The refund is just an intimation and NPCI will automatically debit. So that means our bank is going on shortfall. Actually, for making the system working better, NPCI is giving the first time certification, and all the banks or corporates are continuing that for long period. So there should be a periodical visit or periodical audit of the systems of corporates and banking is the requirement to make this system function better. And also, like other credit policy like this, whatever the problems happening in the banks should be shared, the case study should be shared to other banks and make the ecosystem well, how it should be, what are the proactiveness we should take to avoid these type of cases. This is some request from the bank side.
Other comments, questions? There's one back here.
This is David Paradiso from MyInvest. I had a question for Victoria, but can also someone else chip in. What is Acción doing on consumer data protection and privacy? That's something that concerns us very much, so maybe you can expand a little bit on that subject.
Yeah, no, critical topic. And I think, certainly when we reflect on the transition of moving from very much of the kind of loan officer-led type of model to one that is much more digital, that is a key change in that there's no longer kind of that person that's involved that's directly engaging with the end user customer that may be explaining or maybe also giving insights of what should be shared, what should not be shared. With a purely digital model, then there are those risks if that's not built into the product itself. I know that the SMART campaign, the Consumer Protection Initiative housed at the Center for Financial Inclusion at Acción, recently released digital credit standards, specifically thinking through what are the differences around client protection issues that when you move into more of a digital type of transaction. And certainly data and data protection, transparency around policies, around what institutions are doing with your data. I think all of those are certainly critical ones. So I think within Acción, certainly in the work that we do with either our investee companies or the advisory work that we do, I think certainly working with those institutions, helping them think about how they ensure that they're transparent in what they're communicating to clients, that they have the right data privacy policies in place, that they have the right security systems in place to ensure that there are safeties around that. All of that becomes a critical piece of it. But I think even more critical, obviously, for those that really are shifting to much more of a digital model and don't have that personal touch anymore.
Good, thank you. Sangam, would you like to take that on as well? Because your business actually relies on data. You use data to make your decisions.
Yeah, absolutely. And I think there are these 2 points which are of a lot of importance. One is on privacy and the other on data security itself. And I think privacy now boils down to informed consent and not just consent. There is a draft law in the making right now which I think is taking care of all these aspects. We have seen data really help, and in the kind of business that we are in, it's all informed consent because the customer is directly interacting with us. And I think that data is creating a lot of value in the way that you can underwrite a consumer. So there is tremendous value there, but at the same time, you have to be cognizant that that information ultimately belongs to the user. And if you're going to use it, then it needs to be with that informed consent. At the same time, with the way digital channels are expanding and the fact that it's now mostly inside a mobile phone, it's opening up a lot of vulnerabilities around data security. And that's going to be a constant battle. I think everyone is going to be challenged on that aspect where, how to keep that data secure will continue to be an important aspect for all organizations. And if I look at, the kind of progress in the last few years, there is from the entity side, I think there has been a lot of focus which has happened on what to do around data security. Sure, certainly one can do more of that. But now I think consumers are also and users are getting more aware about what they need to be doing to protect their data. But I think the big thing is going to be a sort of a regulatory architecture around it, and I think with the new data law that comes in, I think that should be in place.
Okay, so headed in the right direction. What other things, I'd be interested in anyone on the panel on this question of, you've raised some points about how we need to improve things. One went back to the regulators playing a key part. I think there was a sense generally in the policy environment, particularly around things like DBT and so on, that there are improvements. But what other things do we see? Do we sometimes, for instance, have a solution that's looking for a problem, or we have a financial service that's looking for a use case? Are we getting the wrong end of this sometimes? Anybody want to comment on that, or what other gaps do you see that we're not addressing right now in this digital world? Must have been a bad question. All right.
Go ahead, after you.
I think, so I think we also spoke about that in the morning. I think what we are not seeing is a diversity in products and services which is being available. So we are saying, essentially what we are seeing is one size fitting all, and which is not the case. Though we've started to see some stuff happening, we've done some work in terms of segmentation of customers, and that's not just demographically, but I think based on attitudes. If I'm a cautious investor, I could be, a cautious investor in the rural areas or among the urban sort of poor or even rich, right? So I'm a cautious investor, and what does a cautious investor mean? And what kind of products would a cautious investor need? And we're not seeing enough of that happening right now. I think so that's one gap which we see, which does need to get resolved. The other thing which we've started to work on already, and Alkesh spoke about it in the morning, is how can we use about half a billion odd smart, non-smartphones, and how can we get those people who have feature phones involved in doing payments themselves? Part of them are already sort of into the space by using APS at the retailers, but how do we start doing stuff for them on their own, where they see the benefits accruing to themselves and to the entities that they work with in a bigger way. These are two key things which I think will need to get done. I think the third, which we also alluded to, is online dispute resolution, right? So because we are in a digital world, we need to solve these issues and challenges. So as an example, on UPI, why should a transaction be hanging, right? If it hasn't gone through, it should be identified as terminated or failed, and you can redo a transaction in 10 minutes later, right? Why should it be hanging? It has no reason to. So I think those are some of the things we now need to go back to from whatever we've gone and learned, and I think that's going to help improve it. The other is, I think the last one is where, work out of nearby. I don't think we have enough agents in the country as of today. Our sense is that we are roughly about 1.5 million agents, including all agents of CSCs and payment banks and everybody else combined, about 1.5 million. My own sense is India needs somewhere between 2.5 to about 3 million agents. And what we've seen with our research in Kenya is that when an agent is in the neighborhood, you see higher number of transactions, you see higher number of savings, and we're seeing about 1.2 to 1.7% of the population moving out of poverty just because of being in the proximity of an agent. So that aids you to save, because the answer to not always is credit, right? And hence, what kind of products can you save in, and should you save versus store versus invest? They're all three a combination of what do you need to do as as a consumer.
There's a lot more diversity in product. And on this question, you wanted to, I think, answer this, and I'd also be interested beyond that in your comment on the agent issue in the last mile? Because this morning, I think there was this sense that, okay, we have these 1.5 million or some number like that, but it's not really working so well outside of maybe more densely populated areas.
So I'm taking it as a wish list, and I'll really prioritize the top 4 items which can help the ecosystem do better, Steve. The policy consistency is warranted. The changing laws have already seen 2,000 startups shut down. The change in the rules of MDR or prepaid cards had enough of telling on the startups who are trying to move or run after the moving goalpost. Second is that I want someone to help understand himself is that, and we understand it very clearly, that a cash in, cash out retailer, a business correspondent agent, need not know the 900-page banking guidelines and take a test. I don't know what purpose will it serve, and where the books are not available, the only thing available is in 900-page Marathi that we could get in Mumbai, and in Shuddha Hindi where it is available, it won't make sense to people. Third really is about the frauds that are happening in digital transaction. I just don't understand. It is very much digitally trackable. Why can't you go after that guy who got the money at the end and hang him to death? 1 million transactions a month are frauds. Why are people just missing out that these are KYC'd bank accounts where ultimately the money has gone and we are just sleeping over it? So I think we can do much better with these enhancements or eye-openers.
And give us a sense on the, can you comment as well on the question of agents? Is it really working? Are we really getting that outreach happening? That's part of this change to digital, is those people are a translation mechanism that's pretty important.
Yeah, see, he's a trusted guy locally. You trust him for your kids' grocery, your milk is bought from the retailer. He's good with the interaction of, and I'll say it in English only this time, not 2 kilo aloo, 1 kilo pyaj, 100 rupees ka mutual fund. That is the interaction of future of financial services. Get a packet of chips, get me a packet of biscuit, and also give me 100 rupees mutual fund. He is viable with that. You don't need to really get him to do that 900-page test. Be prepared for things which will not come his way. People trust him gradually with cash in, cash out. They will start saving. They already have started insuring. For example, we sell 1,000 policies a day. Those things will start happening gradually, but it's a first step first.
Can I just respond to that? So one is that I disagree that a mutual fund can be compared to a product, physical product. Financial products are different. They are invisible, you cannot taste them, you cannot sit in them. They are created in the minds of the consumer when they are described, either through brochures or through the person selling. The moment of truth of a chip is now, of a telephone service is right now. The moment of truth of a pension product is 40 years later, by which time it's too late to know whether or not you had a good product. Which is why you cannot have mutual fund or insurances being sold in the manner of potatoes and tomatoes, because there's a whole question of suitability of that product to the person buying. Now, if we take this idea of suitability a little forward, and we can have, say, index or exchange-traded funds in a box with different risk and age profiles mapped out, then you could possibly think of having it in a box and off the shelf. But if you put these products on the shelf with high commissions, you will have people being missold the products, especially to people who cannot afford to pay those high commissions. So I would be very careful before I include a mutual fund on the vegetable cart.
I agree, and thank you, Monica. This is one reason, gentleman behind you, Tamal, if he will take note of why the gap will continue growing. And I fully take her point, because it has to be like, mushkilai itni badh gayi, galib ki aasan ho gayi. You have to simplify really. Mutual fund means 100 rupee debt fund, period. No complications. Index fund is like committing suicide. He won't understand, and the gap will continue to be maintained.
So the debt fund, if it has a high credit risk, then that money is gone. So I'm just saying these products are nuanced. If you have what happened in debt funds 6 months back, then this safe debt fund is going to explode. So all I'm saying is that if you have enough caveats in place to say this can be sold off the shelf, then we can go there. But till we don't have those regulations in place to say only a AAA rated government securities ETF is allowed to be put on the shelf to be bought, we are fine with that. So all I'm saying is let's put those rules in place before we open it up to the vegetable carts, to the vegetable sellers.
Any other panelists on this one? Okay, so it's off the vegetable cart for the moment. Yes.
So, question to Anand, Sangram, Pavan. You know, one of the questions which I have is essentially the sustainability of the BC or the agent banking model. Because, you know, what we have, unfortunately, in this country, and Sangram starting 10 years ago on the card side, you know, it seems to be a race to the bottom, especially when it comes to prices. You know, we had a very healthy interchange system on credit. You know, it went down sub-interchange in terms of the discount rates. We had a very healthy pricing model, especially when it came to remittances. Again, you know, went down to a level which, and influenced by a few players. We now have UPI, which is basically, you know, which is zero pricing. And we now have a situation where you're talking about MDR, which is again, you know, going to near zero, whatever it's there, supported by some incentives. So where does someone like a BC, while I understand banks have other forms of revenues and other things, but if you really look at a BC out there, agent banking outlets, you know, while products like mutual funds, insurance, others will come in, but the primary use case today is cash in or cash out, more like a cash out, and that too because of the various subsidies and everything which has come in. So how would you grow that base from one? I'm Anand, you know, you know, that could be a separate conversation. How do you make money? But more importantly, you know, how would, Pavan, you would grow from 1.5 million to 2 million or 3 million? What is the business case? And is it sustainable as an entity?
These are two different things, Shantanu, you know it well. The MDR is the bank sustainability question, and you're not asking any one of us about that, right? The BC sustainability, he is viable selling potato chips and other things. It is just an extra infusion of one more service. So it is not that in the evening 2 hours he will carve out to do banking services. He's gonna engage it in the same interaction, and that is when he will be viable. He's anyway sustaining with what he does. The BC model idea is not about really setting up a separate shop, like Dada was mentioning in the morning, to open a separate outlet for bank branches. Viabilities are at question, but BCs are viable on their own, provided there are few more eased norms of, for example, 3.15%. Please someone pass it back to the BC instead of 0.15%. He will make viability out of himself.
So if I add to that, I think there's a link between the way these two businesses are running right now. So if you look at payments, and from being a business model with its own revenue dynamics, now payments has become just an engagement model and doesn't have its own revenue dynamics anymore. It is becoming more and more of a public good, right? But it is like people say, the most ubiquitous need of consumers. So it is a great engagement platform. So if I think of the BC model, the retailer out there has a usual set of consumers who are coming there. But if he adds payments, he adds one more very dynamic engagement offering, which allows more footfalls. And if you go to the other side, where pure payment platforms, they are now looking for ways to monetize themselves, right? Payments in banks, payments was always seen as a way of driving engagement, of deepening relationships in the CASA accounts, and of then being able to cross-sell more into those accounts. But pure payment platform are now looking for ways to monetize. So I think it's an unfortunate outcome for me that payments on its own doesn't have legs to stand on from a revenue and P&L side, but it is now becoming more and more of a utility and public good.
So okay. I'll probably add to that since you asked my name on that. So, is there enough clarity on a business model of a BC? The answer is no, because there are several kind of cuts there. You see in urban versus rural, which is a remitter versus receiver or a payout. Then there is a sales agent versus I think a service agent. Then you're saying an agent at a frontier who won't ever have enough transactions to be profitable. There are lots of options in the middle. But one thing I think is clear, that it's an adjacency business. It's not going to be a standalone activity to be done, and that's what will reduce costs. Having gone and said that, I think there will be a combination. There will be some agents in the frontier who will never have enough transactions, and should we therefore exclude those people there? The answer is no. So therefore, should we have a model which subsidizes these individuals or these organizations to be able to serve in that area? The other question which I have, which is related, is the banking industry went and introduced a set of ATMs. They never asked a question, how much revenue will an ATM generate for me? It was a very simple strategy of saying, can I get people to transact a very simple thing on their own by not coming to my branch? Right? Why are we now not looking at this from that way and say that if I put up a branch, it will cost me a crore rupees in setting up and about 5 lakh rupees a year to run a branch, but instead if I do this extension, it might just cost me 5 or 10,000 rupees a month. Why are we not having those conversations? I think it's time we started to have those conversations, and like you said, it's a public good. Build this network up as a public good so that the service is delivered, and on top of that, there will be a lot of opportunity to do agency revenues, which is what we should be looking at eventually.
Yeah, just a small point on that, and to the point that you were making. When people talk about how costs have been brought down on acceptance and all these things, I have a very minor semantic point to make there, that it's not costs which have been brought down, it's the pricing which has been brought down, right? And there's a difference between the two. Unfortunately, the costs haven't come down the way the pricing has.
So I
You
had a
want to
question.
come back? Anybody want to?
So I had a question, actually. So I really like the term of consent and informed consent, but could not understand the difference. For example, if I am buying an insurance which has a terms and condition of around 8 or 10 pages, and when I sign on that, will that be considered as a consent or informed consent? Number one. Number two, do we assume that all the customers who are in the lower segment, so whatever they sign, will that be considered as a consent or informed consent? Because the person can later say that it was not informed to me. And it is very tough. Even in case of Aadhaar, whenever you do an Aadhaar authentication, there is a pop-up from UIDAI that you're supposed to read to the customer. But on assisted mode, nobody reads that. But then the customer has consented through OTP. So is that a consent or an informed consent? I just want to understand the difference between both. Because that will become a base of what we are promising for the financial literacy and all other financial product awareness to this segment.
It's a fantastic question because we are signing off on things we have no control on. So everybody who has a home loan, basically you've signed your life away because there's no way that you can change that contract. That informed consent begins to make sense when, again, either industry associations or regulators put in place mechanisms where disclosures are meaningful. We have disclosures which are completely opaque, completely meaningless. If the disclosures are to be meaningful for the consumer, then the regulator has to think about the world from the point of view of a consumer and what is important to him or her, and have those 3 or 4 material things in bold disclosed very well. And I think CGAP has done excellent work, I think, in Kenya on this whole disclosure, where there are ways to indicate what happens in this product when you buy it. In 2 or 3 lines or 2 or 3 numbers can be disclosed. Like you have product labeling on food, it is possible if you do enough work to start having meaningful disclosure, meaningful labels on products. Till that time comes, I think we're just signing away those
I
10-page
think
documents.
those products will be mostly about the positive parts of the product, not the negative, that if you do this, you will be kind of penalized for something.
Which is where the regulators come in, because then the downside of the product is also spelled out very clearly, because the firm is going to talk up its good points, absolutely. But then once you put down, what happens when the market goes down by 10%, what happens to you? What is the potential loss of this product? Or what exactly have you signed on? What is it that this product is going to do?
But even if I signed, can I not say later that it was not explained to me?
So here's the way of looking at it, yeah, right? You take all our there's a medication, in the world, right? You'll take a Crocin or a Combiflam or anything else that you want to take to. They always say that there will be after effects. And do you read it? The answer is no, right? It's because what you want is a gratification of something which just troubling you. Where the industry and the regulator will all come together and define what is an after effect versus what is the right thing to say and do, there will still be people who won't look at it, right? I think, so we must understand that. But I think this also highlights another thing, where the regulator role is important. Absolutely, it's important. But we also understand that the role of the entity, of the private sector, is also important in this, and they are driven by motive. But I think the key thing there, which we should insert into now, is ethics. That is what I'm doing ethical or not? I think once we start imbibing that within ourselves, our children, our colleagues, our businessmen, and everything else, we might see a very different world. And I think that's the hope I carry. And we need to raise the level of a debate of ethics in a far bigger way, far better way. It's not a dirty word.
I don't have a question. I do want to support the answers and explain both the informed consent and the data privacy protection that was raised. I want to share the good news to Sangram and everybody else here, that in our country, we have already taken the first brilliant step of enacting a regulation to protect the data and to protect an individual's ability to give informed consent, and even more brilliantly to revoke it. So this is in the form of a regulation issued by 4 regulators: RBI, SEBI, IRDA, and PFRDA. And this is already in place. Probably many of you haven't heard of it because we are not yet in production as an ecosystem, but it is right here. And I would think it's a brilliant forward step in data democratization. It protects data. It gives you the ability to give consent, revoke consent, and informed consent as well, because there the consent is given not on a 10-page document, on a couple of important points that are relevant for that particular situation or product. So I just want to share this with you. It's called Account Aggregation by RBI, very self-effacing name. It's really open banking. So I just want to say it's right here. We shouldn't worry about it. Hopefully this will be extended to other domains of data like telecom, health, education, and also social data. Thank you.
Thank you. So it means our laws and our regulators are starting to catch up. Victoria, do you have a comment on this one?
No, just I guess to piggyback on the previous commentary, I do think institutions do have an obligation, and I think there's also a business case to be made for ensuring that they are perpetuating financially healthy customers. I mean, I think a customer that becomes financially unhealthy due to not understanding what they were signing up for or whatever is not in the best interest of the institution as well. And I think there's lots of examples now of how institutions are building more of those kind of financial capability building messages into the products themselves, not as separate standalone initiatives, but really ensuring that the products themselves, whether it's the nudges, the SMS reminders, ways in which some of those messages can be transmitted, which ultimately is good for the bottom line as well.
Good, thank you. We're sort of past 5 o'clock, although the organizers gave us an extra 10 minutes because we started late. So I'm going to start with the panel just for last comments from them on the issue of saying what's one reason, or give us one good reason or one prediction about why you're optimistic about where we're going with this whole issue of digital financial services and financial inclusion in India. Yeah, we'll start down at that end. We'll move this way.
Yeah, I'm optimistic because I am in it. I'm in it.
Great, I love it. I like the confidence.
Yeah, I think largely to do with the demographic change, the demographic dividend. A lot more young people who are now consuming things digitally, and hence, you know, financial services will be one of the things that they'll consume digitally.
I think the reach that digital can provide in deep rural and other areas where I think the physical stores will never be able to reach, and the physical infrastructure in terms of a bank branch and other people will never be able to reach. I think the only way to reach there is digital, and that's why we are really optimistic that the digital is the way to get to scale and to get access to people.
Optimistic because Indians are smart, value for money consumers, and if we can get the products to them in a right environment, very optimistic.
Yeah, it's certainly enthusiastic. I think with the caveats that have been discussed around data privacy and transparency, I'm most excited, I think, about the potential for people to own their own data and be able to use that to unlock so many doors.
Good, let's wind this up and then we can thank the panel. Just one comment from me is to say that in going around, I said this at the beginning, I'll repeat it now, but in going around to countries all over the world, I'm asked about India often, and there's things happening here that aren't happening in other places. That's why you saw Google Pay go live first here in India. Why? Because UPI made that possible. We're seeing a new data architecture emerge, and I think that's something we don't see in other countries. So there's a lot to be learned from the India experience, and I think we see on this panel an optimism that we can actually get to grips with these issues and really make this work to improve the lives of poor people. So let's thank our panelists.
Thank you so much, Steve and panelists. While I had put an initial constraint on the time, I guess we had the privilege of actually listening through the whole conversation with this group of panelists and also have time for questions. We will move on to the Inclusive Finance India Awards presentation, which is customarily the final session of the first day of the Inclusive Finance Summit every year. We'll just take a couple of minutes to change the stage setup. Kindly continue to be in the room. We would like the presence of as many people to applaud and celebrate the winners of this year's awards. Thank you.